Well, as you just heard in that story from Deborah Mark, one of the major sources of funding for California's high-speed rail project was revenue from the cap-and-trade auctions of carbon credits. These are quarterly auctions. They allow the heavier greenhouse gas emitters to buy credits from companies that aren't using their allotment. The High-Speed Rail Authority is counting on $10.5 billion a year as its share from the auctions. But last week's auction was a bust. 2% of the credits were bought. With us to talk about the potential problem this poses to the high-speed rail project is Sacramento Bee columnist Dan Walters. Dan, good morning.
Good morning.
So there are several possible reasons why the auction was such a bust. One of them is this secondary market that started up where, people can trade the credits that they have, and apparently that's trading well below the baseline of the state. Was that anticipated?
Well, it depends on who you talk to. Actually, a number of the analysts of this market anticipated that and other factors. That's not the only factor. And that it would create exactly the situation that occurred last week. In fact, I wrote about it before the auction, that this was the likely outcome. Those warnings, they were delivered, those warnings to state officials months ago, and they were basically ignored. But so it wasn't a surprise to the people who had seen this coming, but it was obviously a surprise, or more or less, to the politicians. There are many factors in this. One of the great underlying factors, yes, the speculators who bought credits up early and then dumped them into the market this year certainly undercut the auction. But the reason they dumped them is that there's a great deal of uncertainty as to whether this cap-and-trade program is, number one, legal at all, because there's a lawsuit pending on that, and number two, whether it's continued past 2020. And all of these auctions are basically kind of bets on what might, just like the buying stocks and bonds, it's a bet on what might happen in the future. And if the whole program would vanish in 2020, then if you have any of these credits, they're going to be worthless. So the speculators dumped. There are other factors attached to it, and the net result was there was a glut of these emission allowances available at prices under the official benchmark price that the state wanted. Therefore, the state could sell very few of the allowances that it wanted to sell. Ergo, instead of getting over $500 million, they only got about $10 million. And the question is it a one-time thing or is it going to go on? And the people who have been analyzing this market believe that the underlying conditions will continue on indefinitely, and that this thing may be a complete bust going forward.
Is the thought, too, that different companies may be making more progress in cutting their greenhouse gas emissions so they have less of a need to buy credits, or maybe they're making more credits available because of those gains?
Yes, that is a factor. See, the state, this is only one way in which the state is cutting greenhouse gases. They're also putting mandates on utilities to use more wind and solar power. And as those emissions decline because of all the programs, then there is less of a need to buy these credits. Now, ironically, the fact that they didn't sell all these credits will actually reduce the cap under which these operate. The cap is the other part of cap and trade. We've been talking about the trade part, but there's also the cap part, the amount of carbon emissions that the state is going to allow in a given year. And that's actually going to lower that cap somewhat, the fact that they haven't sold these emissions. What happened in the market this month doesn't really affect the emission levels. It affects the finances that the politicians in the Capitol expected to get out of reducing those emission levels. And it affects a wide variety of programs, not only the potential of the bullet train. The bullet train was people were intending to use this allocation of cap and trade money and securitize it. In other words, use it to borrow money to build the next segment of the project between the San Joaquin Valley and San Jose. And that was going to be pretty dicey to begin with because of the legal uncertainty of the program. But now if the market itself is collapsing, that makes it even dicier and makes it more difficult and probably impossible, in fact, to use this cap and trade money as a source of construction to construct this bullet train. But it affects a whole bunch of other programs. For example,
what other ones? Yeah.
dangling money in front of the legislators in hopes of getting a deal on a transportation package that would fix highways. That was going to be part of it. There's about 10 or 12 different things in the governor's budget. He wants to spend $3.1 billion in the 16-17 fiscal year in cap and trade money. Some money is carried over from previous years, plus $2 billion that they thought they were going to get in 16-17. And the bullet train was only about 1/6 of that $3.1 billion. So there's a lot of stuff at stake in this. This was an enormous pot of money the politicians have been lining up to spend, and there's no shortage of ways to propose to spend it. They're all over the place. And the whole idea that you're even going to have any money to spend now is very much up in the air. And the chances are probably they're not going to have very much at all.
We're talking with Dan Walters, Sacramento Bee columnist, about last year's fizzle of an auction of greenhouse gas credits that could be bought up by industries that would need the right to emit more greenhouse gases, and only 2% of the permits actually were sold, of those that were expected to be sold and made available in last week's auction. Also with us from California Legislative Analyst's Office, Fiscal and Policy Analyst Ross Brown. Ms. Brown, thank you for joining us.
Thanks for having me.
What options does the state have to backfill this money that hasn't come from the auction?
Well, I think it's one important point to note, and I think Dan touched on it just a little bit, is currently there's a pretty sizable chunk of money that has already been raised from auctions that have been conducted in the last year or so, and even before that. So by our calculations, there's roughly $1.4 billion that's available to be spent on a variety of different programs. Now, the big question, of course, is sort of going forward whether or not the auction that was just held is indicative of what the revenue is going to be in the future. And so really, I think there's a lot of uncertainty about sort of how long this will continue and how long the lower revenues might continue. And so I think from a budgeting perspective, then it's going to have to be a matter of approaching it cautiously and be careful about sort of how much money is allocated to the variety of programs, and making sure that you're comfortable with whatever sort of revenue assumptions are going into your budget planning.
Let's say that the next one or two of these quarterly auctions also are a bust. I mean, at that point, you get a little panicky that in terms of the long-term funding mechanism for the train, this isn't going to work.
Yeah, I mean, the immediate effect of that, since a portion of the revenue automatically is allocated to high-speed rail and some other programs, then there's an immediate sort of reduction in money. I think in the short term, and I apologize, I'm not the exact high-speed rail expert in our office, but in the short term, my understanding is high-speed rail is spending some of their federal funds to fund some of the construction activities right now. But in the long run, certainly there are a lot of questions about the amount of revenue that could be generated from this program. Again, I know Dan mentioned the post-2020 assumptions and authorization for the program. That's an issue that our office has raised, and one that the legislature might want to clarify sort of the authority for the program beyond 2020 to give a little bit more certainty about the revenue going forward.
Ross Brown of the State Legislative Analyst's Office, where he's a fiscal and policy analyst. Dan, back to you. Here you've got what is the signature part of Governor Brown's agenda for the state. A lot of support among Democrats in the state legislature, but there is a partisan divide over the train. There's even a regional divide over the train. I mean, is it possible that this thing ends up, blowing up in Sacramento if you start seeing multiple of these auctions not work?
If that's true, and then the thing does blow up the train. The train has no other major source of financing beyond the current federal grant and the state bond money that's building the short line in the San Joaquin Valley. To make a major expansion over to San Jose, which is the next phase, they're going to have many billions of dollars. And what they have been planning to do is to try to borrow money. This is at least one of the contingencies, to borrow money from somebody, a bank, the federal government, somebody, and pledge the cap and trade money to repay that loan. It probably wouldn't have provided enough money to do the whole project, but it would be a big chunk of it. And if the cap and trade money isn't there, obviously that blows up the whole financing plan for the bullet train. Now, you touched on the partisan divide. Yes, there's a partisan divide over the train. There's also a partisan divide over the whole cap and trade program. One of the really underlying issues of this thing is, does this cap and trade program expire in 2020 or not? And it's a legal dispute that's unresolved. There's a debate going on behind closed doors over this right now. The administration seems to think they can continue it on, but clearly the market believes that it's in jeopardy of ending, which is one reason why the speculators dumped their holdings and flooded the market with these allowances. Plus, there's the lawsuit that's been attributed to, and it could, if it's required, could the administration go to the legislature and get this program reauthorized? It's very, very, very chancy. It might take a 2/3 vote, which puts the Republicans in the driver's seat, and it may run afoul of a ballot measure that the voters passed in 2010 that redefines the whole area of what are taxes and what are fees, and could make it much more difficult to get a reauthorization of this program.
All right.
This thing is maybe collapsing before our very eyes, and it has all sorts of ramifications, not only for the bullet train, but for a whole variety of other places that the politicians in Sacramento wanted to spend money.
Dan Walters, Sacramento Bee columnist, always appreciate it. Thanks so much, Dan.
You're welcome.
Thanks. And also with us, Ross Brown of the State Legislative Analyst's Office. You can share your comments about the cap and trade auction, which fizzled last week, on the AirTalk page, kpcc.org. Now time for a live